When a company like SpaceX goes public, people ask one question: should I buy? But the better question is, how does this affect my life?
If this company goes public, should normal families expect better internet, higher prices, or just another giant corporation trying to grow?
The opportunity is real. Better access for places cable never cared about. But public companies also face pressure to grow revenue and margins. If satellite internet gets bigger after the IPO, does that mean small towns finally get the same opportunities as everyone else? Connectivity can reduce inequality, but it can also create dependence. The same network that opens doors can become the toll gate. If airlines, ships, remote workers, and travelers all depend on this network, is SpaceX selling internet or selling access to movement itself? Recurring revenue sounds beautiful, but when a company becomes public, every subscriber becomes a growth number, and every price increase becomes a target.
If satellite to phone becomes real at scale, does it pressure mobile carriers, or just create another expensive layer above the plans we already pay for?
New technology rarely makes products cheaper immediately. First come premium tiers, then segmentation, then maybe lower prices later if competition actually forces it. If better connectivity lets my business reach more customers, am I becoming more independent or more dependent on one private network I cannot control? Better connection can unlock customers, payments, and logistics, but when your business depends on one private network, that network eventually influences your terms. Now the story changes. Once SpaceX becomes public, rockets, satellites, and ambition get converted into price, expectations, pressure, and shareholder demand.
If regular investors finally get access, how do I know whether I'm entering early or entering when insiders want liquidity?
SpaceX built something extraordinary. That deserves respect. But an extraordinary company can still be a poor investment at the wrong price. When you buy this IPO, you are not buying only Starlink. You are buying rockets, regulation, future projects, founder risk, and one expensive narrative. If this company represents the next generation of infrastructure, how do I separate rational exposure from the emotional fear of being left behind?
I do not want to chase hype, but ignoring a company that could reshape global internet infrastructure also feels like a financial mistake.
The future can be real, and the investment can still be overpriced. Transformative and expensive can exist in the same company on the same day. Excitement is not the problem. Acting without a process is. Serious investors know exactly how much they can afford to be wrong. Famous recent IPOs averaged 27%. The S&P 500 returned 53% over the same periods. The names were unforgettable. The returns were not.
If Didi, Rivian, and Figma disappointed after huge attention, what actually protects me from the same mistake here?
SpaceX is not those companies, that matters. But a better story does not eliminate valuation risk, it only changes how investors justify it.
This is not just an IPO. This is a chance to own the future before everyone else fully prices it in.
The phrase, "the window is closing," converts a financial decision into an emergency. And emergencies bypass the part of the brain that asks price. A massive valuation is not irrational by itself, but it means investors are prepaying for years of growth, execution, margins, and very little room for disappointment. If Starlink is the cleanest revenue engine, how do I value the rest of SpaceX without overpaying for the strongest segment? The optimistic case says Starlink can carry the valuation. Maybe, but public investors cannot buy only the part they like. They buy the whole machine. If everyone around me is excited and moving fast, how do I know whether I'm analyzing opportunity or just reacting to collective pressure? FOMO is not irrational. Sometimes early belief is rewarded. The question is whether this company, at this price, justifies that feeling. What if my friends buy, the stock runs up, and I spend years feeling like discipline was actually the mistake? Social proof is one of the strongest forces in markets. When everyone moves together, discipline can feel stupid before it feels necessary.
If retail investors finally get access, does that level the field? Or just let us join the most emotional part?
Retail access matters. But if demand is massive and allocation is limited, many people still buy later when excitement already shaped the price.
If I cannot actually buy at the IPO price, am I investing early or just paying the excitement premium everyone else created?
Every dollar above fair value is future return already spent. Entry price is not a detail. Entry price is the investment.
If one private network becomes critical for governments, travelers, ships, and remote communities, what happens when that network changes its terms?
Starlink can create access where nothing existed, but when millions depend on one network, that network gains power beyond normal competition. What happens if the company depends heavily on one person, and that person becomes distracted, unavailable, or pulled toward other businesses? A visionary founder can create enormous value, but when one person becomes central to valuation, investors are not just buying a company, they are buying dependency. If I buy shares after the IPO, do I actually get ownership influence? Or just financial exposure without meaningful control? Buying the stock does not mean buying a voice. You can own the economics while real control stays somewhere else. An IPO is two events at once, an entry point for new investors and a liquidity event for early holders. Know which side you are on.
When I buy on IPO day, who might be selling to me? And why would sophisticated holders want liquidity at this price?
Every transaction has two sides. Your excitement may meet someone else's exit. Both can be rational, but they are not equally informed.
My kid sees the future. I see a subscription, a monthly bill, and another company trying to become unavoidable in our household budget.
The strongest argument for buying is infrastructure ownership. The strongest argument against is price, control, and risk. Both deserve to be heard before you decide. You can admire the company, use the service, and still decide the stock does not fit your portfolio. That is not fear. That is judgment. How do I know if I am analyzing the company or just buying because I want to feel early, smart, and included? Belonging to a narrative is human. Markets exploit that with precision. The investor who can name the emotion has already reduced its power.
So what should a normal person actually do when a futuristic IPO makes doing nothing feel like a financial mistake?
The future may be real, but before you buy it, understand the business, the price, the power structure, and your own psychology.